Alright guys, this is part 2 of the series How to Become a Trader. If you've not seen part 1, make sure you check it out. The link is below in the bio. In today's video, I'll be going through how to find the right broker, the steps you need to take, and what you need to bear in mind when you're looking for a broker. Assuming you've seen part 1 of this series and you've attained all the knowledge you need to pick the right market that's for you, and you're ready to get started and look for the broker. There's a lot of brokers out there and they're all suited for different markets. So for instance, Forex, stocks, options, futures, etc. So you need to understand the right broker to go with, and not all brokers are suited for everyone, even though you might say, okay, I'm ready, I know everything I need to know about the Forex market, I'm ready to get my feet wet in the Forex market. There's a lot of Forex brokers, but you need to know what to look for to understand if, first of all, if they're a good broker or not a good broker, and also if they're a good broker for you or if they're not a good broker for you. Welcome back to Investor Prime. If you're new, make sure you subscribe. Follow me at Instagram at Investor Prime. Let's get into today's video. One thing you need to bear in mind when choosing a broker is that not all brokers are suited for all strategies. For instance, if you're planning to be a day trader or a scalping trader, then you'll be limited to the number of brokers that are suited for you. You need to pick a broker that, first of all, have fast execution speeds that can get you in and out of the market when you need. Have low slippage, for instance, if you're in Forex. Have tight spreads because you're going to be in and out of the market several times a day scalping. So you need to make sure your spreads are low, which basically means your commissions will be lower as you're placing multiple trades. If you place, let's say, 10 trades, those commissions all add up. So you don't want a case where you've placed, let's say, 20 trades and you're successful, maybe you get 19 out of 20 right. You might actually still lose money because your commissions are too much, you know. So you need to bear that in mind. And if you're, for instance, if you're looking to swing trade, you need to make sure that your swaps are going to be cheap. Or some brokers actually offer maybe like 11 days swap free trades, which means that you're not going to get charged for holding trades overnight, which you need to do when you're swing trading. You need to hold them for a number of days or even months or weeks or even years. So you need to take that into account when you're choosing the right broker. Another thing you need to take into account is some brokers, they charge you to withdraw your money. You know, trading is all fun and games, but at the end of the day, you need to withdraw your earnings. Otherwise, it's just figures and it's unrealized profits, even though it's sitting in your brokerage account. So you need to obtain your money. So some brokers, they actually charge you per withdrawal, and some of them are cheap, some of them are expensive, some of them offer you your first withdrawal a month is free, etc. So you need to take all those into account, because part of trading, a big part of trading is all about money management. You know, it really comes down to the wire with it. You need to make sure you're managing every little thing. And these are important things to take into account when you're choosing the broker. So with Forex trading, the brokers, when you're choosing the broker, good things to take into account if you're only Forex trading is, so first of all, if you're day trading, this would be your spreads. They need to be tight spreads. Also, you need to take into account your withdrawal fees. If there's any, a lot of them actually are free to withdraw. So, which is good, but you need to take that into account. Your withdrawal fees, you need to also take into account your swap fees. So like I said, so for instance, these are charges for you holding trades overnight. Also, if there's any slippage, you need to take into account how much slippage. There's always going to be slippage in Forex. Summarize, if a market is very volatile, then let's say you want to get out at X. Basically, the slippage would get you out at X plus Y. So for instance, if you want to get out where the currency pair is trading at, let's say 1.0001, but you end up getting out as 1.0005, so you end up getting out at 4 pips away from your target. That's slippage because of the volatility. So you need to take into account this. A lot of brokers are good that they get you out as quickly as possible so you don't have a lot of slippage. Because slippage, it's okay if you're trading maybe $1 per pip, but let's say you have a bigger account and you're trading maybe $100 per pip, you know, that slippage can be substantial. So you need to make sure you get tight slippage. Okay, for stock brokers, what you need to take into account is pretty much the same thing. You need to take into account how much it costs you per share to get in if you want to buy shares in companies. So how much the shares would cost, because in the long run, if you're taking a lot of trades or buying a lot of shares, these all add up, which you basically need to take into account when trading. Also, you need to take into account the withdrawal fees, how much they're charging you, whether it's one withdrawal per month. And again, you need to decide yourself how many withdrawals you want to make a month. Make sure you're making a killing with the trading, you're making a lot of money and you want to withdraw money like 3 times a month and you don't mind paying those fees. That's fine. Maybe you're not making that much money, or even if you're making a lot of money but you want to reinvest a lot, you just want a percentage of what you made, then you'll be like, okay, I just want the 1 free withdrawal a month. That's fine with me. I can live on that. That's fine. It's all down to you. And that's key when deciding which broker to go with. But I'm just highlighting the main things to look for. Because when I started trading, I didn't know anything about these. I was basically I thought one shoe fit all. I was predominantly focused in the Forex market. So I thought all Forex brokers were the same until I learned from experience. Basically, I learned the hard way a lot of times with these. Like, I didn't know anything about slippage before I chose a broker, and then I went with the broker. Let's say at the time I was doing Euro US dollar, focusing mainly on that currency pair. So when the news like the FOMC or the Federal Reserve news kicks in, that saw huge moves and huge volatility. So I was pretty much stuck on slippage, you know. Some of the time, well, slippage really affects you badly if you're losing. You know, you're gonna be happy with slippage when you're winning. Anyway, when I was losing, the slippage kept going against me, and I was like, get me out quick, you know. But that wasn't the case. So what did I do? Went straight to the broker, complaining, oh, why is this? Why didn't you get me out of this? When did you get me out of that? I looked very silly when they asked me at the time, do you know anything about slippage? And I was thinking, well, I pretended at the time, yeah, I know slippage, right? That was bad. But really, while I was there talking to the customer representative, I was on Google, like, what is slippage? You know, so those are mistakes you really don't want to make, especially when you start dealing with real money. You need to make sure you know as much as possible before you even make your first trade. A lot of new traders, myself included at the time, they made the mistake of thinking, look, all I need to do is open a brokerage, start playing around, start learning from doing, which is not the case. You need to learn first, understand what you're getting into so that you don't get caught off guard. You know, another thing as well is the spread. Like when I was new, I didn't know anything about the spread. It was telling me, like, brokerages were saying, oh, we'll get you a 3 pip spread, etc. And I was like, oh, I didn't know anything. I was just like, oh, that's cool. And then I started placing a lot of trades. I was right a lot of the time, and I thought, you know what, I should have made X amount. But in reality, I actually didn't make that much. And again, I went straight to the brokerage, like, I've won these trades. These were like how many pips I made in these trades, etc. Why is my account balance not this based on the calculation? And then they said, well, you made this amount, but this is how much you paid in commission. And then of course I started going crazy at the customer representative, started saying, oh, that's ridiculous. How you guys are expensive, etc. And then they told me to learn about spread. You know, and then they even told me that no brokers are good for you. Our brokerage is actually not very good for your strategy. because at the time I was day trading. You know, that would have been good for swing trading because you're looking to make a lot more pips, a lot greater moves. So with stock trading was pretty much the same. But by that time I was experienced enough to know, to start looking into the commissions, what I'm going to be paying per trade based on my strategy, which is not bad because I'm swing trading. I was looking to hold for a couple of days, so I didn't mind. Now with stock trading, swaps, you don't need to pay swap fees because they see it as you're holding the shares anyway over days, etc. So you don't need to be paying swap fees. You only pay that with Forex trading. So I was okay with that. You know, where I wasn't okay with is when it came time to withdrawing money, I'll withdraw an X amount and then it'll be X minus Y, and I'll be like, why did I get less than I withdrew? And of course, I didn't look into how much it costs to withdraw my money. You know, so that's really important to look into. And when it comes to options trading, you know, I thought it was the same as stock trading. I didn't understand that it was totally different, and it was contract based for a number of shares, 100 shares, you know, and the brokerage were treating my trades differently to my stock trades. And I didn't understand any of that because I didn't know anything about options trading when I got into it, you know, and how the brokers treat them differently. I was winning trades, but what I calculated, I wasn't making that. So I had to understand that I wasn't the right broker for me. And also another thing to take into account when choosing the broker is not all brokers take on all clients. So for instance, I'm based in the UK. So when it comes to Forex trading, pretty much all brokers take on UK clients. Even if you're trading on US currency, New Zealand currency, Canadian currency, wherever you're trading on, as a UK client, you can get on. You need to understand where you're located. Some brokers might not take you on. And the same with stocks. I'm okay as a UK client trading on American stocks like Apple, Tesla, etc. But when it comes to options trading, I'm kind of limited. You know, like as a UK client, you need to find a broker that, if you're looking to do options trading, you need to find a broker, first of all, that offers you the securities that you're looking to buy or sell, or whatever strategies you're looking to do on options trading, that they'll offer you those securities. So if you're looking to trade on the UK market, that's fine. You can trade options on your UK securities. But if you're looking to trade on the American stocks, which I trade on mainly, I need a broker that can facilitate those trades for me. And I'm based in the UK, that can take on me as a UK client. You know, but if you're based in the United States, then you're fine. You're not really limited. Pretty much all brokers that offer options trading and stock trading are based in the United States. So, which would be different if you're based in maybe Spain, in Europe, or if you're based in India, if you're based in Mexico, they'll all be different. So you need to find a broker that would take you on as a client, which is part of a challenge as well. If you're stock trading and if you're options trading, also if you're looking to get into a certain market. It was only a challenge for me because I trade predominantly on US stocks. So basically, to summarize, once you understand the market that you're in and you're looking for a broker, the things you should take into account, first of all, is the type of market you want to go into. That different brokers offer services to these different markets. So you might have some brokers that offer services to Forex markets but not stock markets, and vice versa. And also you might have some brokers that offer services to the stock market but not options. So you need to find out which broker offers services to the market and securities to the market that you would like to trade on. And also you need to take into account how they operate, like the commission. And also a key thing you should take into account when choosing a broker is also their customer service. When the lines are open, if you're able to reach them through live chat, if you're able, how quickly they respond to emails when you have an issue. Because this is very important, because you don't want to have an issue and you can't reach your broker. You know, especially if you're in a live trade and like for instance something's going on and you don't understand and you want to reach them quickly, how quickly can they respond, and also how helpful they are. You know, because not all brokers are helpful in that sense. Not all brokers have good customer service. You know, I've been through quite a lot of brokers in my experience in trading, you know. But if you need help or assistance with any of these or one-to-one coaching, then you can reach me via my email address, which is linked in the bio. Alright guys, that's it on step 2, which is choosing the right broker in the series of how to become a good trader. And in the next video, I'll be discussing how to open up a demo account, how to go about using the demo account, and things to take into consideration when using a demo account. So make sure you subscribe, hit that notification bell so you can see when the next video comes up, and you can go through this series and it will get you from not knowing anything about trading to being proficient at trading, or at least having a good knowledge of the steps to take to becoming proficient at trading. I'll see you in the next video.